Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about the Bank of East Asia Limited latest report. The Bank of East Asia Limited offers a wide range of banking and financial services to its customers. At the heart of its operations are personal banking services, which include deposit taking, foreign currency savings, remittances, mortgage loans, consumer loans, credit cards, and cyberbanking. The bank also provides wholesale banking services, including syndicated loans and trade finance. In addition to these core services, the Bank of East Asia offers a variety of specialized services, such as wealth management, private banking, and renminbi services. Its Treasury Markets division provides foreign exchange margin trading and broking services. Furthermore, the bank operates mandatory provident fund services for its customers. The bank's operations extend beyond Hong Kong to China, Singapore, Malaysia, and the United Kingdom, with a significant presence in these regions. Overall, the Bank of East Asia Limited is a comprehensive financial institution that caters to the diverse needs of individuals and businesses across various markets. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted, reflecting the complexities of a rapidly changing business environment. On the growth side, several initiatives have contributed to increased revenue. The introduction of tailored loan products for SMEs and expansion of online and offline payment options have been particularly effective. Additionally, upgrades to digital platforms such as BEA Corporate Online and the launch of Cross-Boundary Wealth Management Connect 2 have also driven growth. Furthermore, certain sectors have shown significant growth, including automotive manufacturing, with a plus 20% increase in FY24. Conversely, some industries have experienced decline due to various factors. Transition risks, physical risks, and climate change impacts have all contributed to revenue decline. Decreasing demand for carbon-intensive products and increasing costs of business for high emitters have also had a negative impact. Moreover, shifts in market sentiment, carbon taxes, stranded fixed assets, and reputational damage have further exacerbated the decline. The aviation and commercial real estate sectors have been particularly hard hit, with declines of -21% and -57%, respectively. Overall, the drivers of revenue growth or decline are closely tied to broader economic and environmental trends, highlighting the need for businesses to adapt and innovate in response to changing circumstances. The net income and profit margins of a company have undergone significant changes in recent times. Initially, the net income decreased by less than 1% due to climate risk stress testing. However, there was no change mentioned in another instance. On the other hand, the profit margins were negatively affected by chronic climatic shifts that impacted the economic outlook and macroeconomy. The profit margins may also be affected by transition risks, which can manifest as increased expenses or decreased revenue. Furthermore, a decrease in profit margins was observed due to deteriorating financial market performance, weakened macroeconomy, and devaluation of assets held as collateral. These changes indicate that companies are facing significant challenges in maintaining their profitability amidst climate-related risks and economic uncertainties. The financial documents reveal a mixed performance across various segments and regions. On the positive side, the aviation and power sectors are on track, indicating a strong foundation for growth. The BEA China and International Division have also made significant strides by conducting portfolio studies and developing tailored customer engagement strategies. In addition, customers with low climate-related risk ratings and businesses with effective management and mitigation strategies for such risks have performed well. Green activities within brown sectors have also shown promise. Furthermore, China has been a standout performer, with the UK-China Green Finance Centre forming a strong partnership with the UK. However, there are areas that require improvement. Brown sectors face high transition risks, while the energy, oil and gas sector is struggling with significant Scope 3 emissions and an increase in absolute financed emissions. The Greater China region has also seen an increase in loan financing to energy, oil and gas sector customers, although its overall contribution to emissions remains insignificant. The management is optimistic about the company's outlook, highlighting several key strategies that will drive growth and sustainability. The primary goal is to achieve operational net zero emissions by 2030 through electrification, energy efficiency projects, and renewable energy procurement. This ambitious target is complemented by a commitment to sustainable finance and transition finance, which are seen as essential for achieving the goals of the Paris Agreement. The company recognizes climate-related risks as a significant concern, but views them as opportunities for growth in sustainable finance and transition finance. Effective risk management will be crucial in navigating these challenges, and the company is committed to managing systemic risks through robust practices. Additionally, the management prioritizes fostering an inclusive workplace culture, promoting diversity and equity, and ensuring employee well-being. Overall, the company's strategy focuses on achieving sustainability goals while minimizing negative impacts on economies, environments, and people. By integrating ESG considerations into investment and lending practices, the company aims to drive business opportunities that promote a more sustainable economy. Supply chain disruption concerns loom large. The extracted summaries reveal potential concerns regarding supply chain disruption. One such concern arises from the exit of an electric vehicle (EV) manufacturer from our loan portfolio, as noted on page 49. This development could have far-reaching implications for the entire supply chain. Another significant concern is the potential for suppliers to fail in meeting environmental, social, and governance (ESG) requirements or comply with the Sustainability Code of Conduct (SCOC). As highlighted on page 125, this noncompliance can lead to disruptions in the supply chain. Furthermore, page 154 underscores the negative impact on economies, environment, and people due to suppliers' unethical practices or environmental degradation. These concerns underscore the importance of carefully managing supply chains to mitigate potential risks and ensure business continuity. That concludes the financial summary for the Bank of East Asia Limited. Feel free to comment below, and I will be happy to answer them when possible.